Welcome to This Week in South Carolina. I'm Gavin Jackson. The Federal Reserve met recently and decided not to raise interest rates. Laura Ullrich, an economist with the Federal Reserve Bank of Richmond, joins us to discuss the economy. But first, national political reporter for the Associated Press, Meg Kinnard, joins me to talk about the most recent presidential campaign news, including Senator Tim Scott suspending his campaign.
Thank you. It's always good to be with you.
Especially in studio. But Meg, you and I were both at Senator Tim Scott's presidential campaign launch back in May. Completely different scene than where we were this past Sunday when you were writing his campaign obit. Tell us how we got here. What happened to this campaign?
Well, I'm sure it comes down to a lot of things, and it's going to take us weeks to really figure out what happened. But I think for Tim Scott, there was really not the fundraising that he had expected to continue following him through. You know, he came into this race with more money than any of his other GOP rivals, but that really wasn't steady. There wasn't like a splash where all these new donors came to him and maybe some big ones kicked in some major bucks. So there wasn't that. There also weren't the poll numbers that he would have wanted to see to kind of give a campaign encouragement. Hey, you know, you're really doing a good thing. Voters in these early states particularly like your message. They'll stick with you through Iowa, New Hampshire, and South Carolina. But, you know, especially with former President Donald Trump's dominance in the race in the GOP primary so far, Tim Scott really didn't benefit from any of the other switches and sways that we've seen for some of the other remaining candidates. So, you know, those two things really just kind of came together to a point where his campaign was like, we have enough money to get through those early contests, but we might really be embarrassed by those results. And so maybe we should get out now and let the field consolidate a little bit. Yeah,
huge bomb on Sunday night on Trey Gowdy's Fox News show. You know, Tim saying not the time. People are telling me it's not the time. And we've been hearing that too on the campaign trail too. You know, you go to these Donald Trump rallies. Of course, those folks are completely different than a lot of other folks who are making up their mind because they are already dyed-in-the-wool ready to vote for Donald Trump. And when you ask them about Donald Trump versus Nikki Haley or Tim Scott, they're like, well, we like Tim Scott, but not the time. And Nikki Haley, they don't register with. So that's how you see that dominance that Trump has. So it's fun. It's fascinating to see that. And then you also didn't really see many debate breakout moments from Tim Scott, too.
You know, it's hard to find somebody along the campaign trail that has something overtly negative to say about Tim Scott. He's made a big point of running a very positive campaign. That resonates, but I think it's also true to who he is as an individual. So, yeah, it's hard to find those people who are like, wow, this guy, we really just can't stand him. But there is a lot of maybe not now, maybe in the future sort of thing. He's only 58 years old. In campaign politics, especially presidential stuff, that is many more cycles potentially to go. But, yeah, in the debates, especially when it was a very crowded debate stage with 8 candidates, and then, you know, as the number has kind of gone down through subsequent debates, there haven't been those breakout moments for Senator Scott like there have been for Governor Haley, for example, for Vivek Ramaswamy. Even Ron DeSantis has landed a couple of moments in those. So those didn't really happen for Tim Scott, and perhaps that's part of what kind of translates into, okay, let's close the doors on this and maybe wait for another cycle.
Yeah, just super fascinating, especially when we see, you know, not even a month ago, him saying, okay, we're going all in on Iowa, even though his package just pulled down a bunch of ads that were running in Iowa and New Hampshire, which was, I guess, maybe the biggest warning sign that we should have been heeding. So really caught his staff off guard, too. And, of course, when you're talking about the debate stage, we've seen that dwindling, including former Vice President Mike Pence, who we thought Tim Scott was going to kind of take that lane. We were just on the show last week talking about that. So
we were just
really interesting to see how we're shaping up 100 days now from South Carolina's primary.
Getting closer and closer. And, you know, going back to Sunday night and the campaign staffers that I was talking to that we were kind of like, wow, what happened? Did you know about this? The number of them who said, no, I did not know that this was coming. Sure, when you have a big announcement like this, it makes sense to have kind of a close hold on the information, or else it is going to leak out before the candidate really intends for it to. I understand that. But to hear, they just asked us all to pick up and move to Iowa for these big moves, and now we have to turn around and go directly back home. There's a lot of frustration. Campaigns always come to an end. Most of them come to an end in a negative way for the candidate and the staffers. But still, this kind of was a different sort of moment coming, you know, at a point where I think folks had at least assumed they would be in it through Iowa, if not able to stick through the other contests that follow.
But I guess that's kind of what everyone's been talking about, is having to consolidate this field. For folks that want someone besides Trump and not to have a repeat of what we saw in 2016, you're going to have to start seeing folks drop off here. But we still have a debate stage coming up on December 6th in Tuscaloosa, Alabama, where we do have what I guess Governor Christie's still going to be on the stage too.
He has said that. I think there's a little bit of dispute as to whether some of the polls he's citing in terms of, yes, I have what I need, may qualify. The RNC won't tell us until 48 hours before that debate actually happens who's in and who's out. But don't forget, at this point, going back to the size of the field in 2016, in the 2016 cycle, we had 13 Republican candidates still competing. And I have to think that in the minds of strategists, even some of the candidates themselves, there's a memory back to that point of like, Remember that? Remember when we didn't consolidate and pull down and kind of get behind each other? And look who we ended up with, who's now still the titular head of our party and, we're facing off directly with. So I think there is a memory back to that cycle and kind of looking forward into the votes of next year among some of these Republicans thinking, all right, let's do it differently this time.
And saving some of that money too for Scott, because Senator Scott just got reelected again. This is his last term in the Senate. He can hang on to some of that money. He brought a lot of the money into the race, and I guess he can use it for whatever the future holds. Do we know what his future's looking like right now?
If there's another federal race for him, he could potentially hang on to some of that. Like you noted, he has said this is going to be his last Senate race. He's never said anything else about other contests. He's already served in the U.S. House. Who knows? We saw Mark Sanford go back to the House after serving as governor and running for president and everything else. So, maybe there's another federal race, or he could just hang on to it and do something different with it. So, that remains to be seen. It's coming back to South Carolina. He couldn't use the money for this, but there is a governor's race that's going to be coming up in 2026.
Yes.
So that'll be before the next presidential cycle. And, Senator Scott may be looking to have something that will ground him in the future more in South Carolina. So we'll see.
It's going to be a wide open race there in 2026, and he'll still be in the Senate. So
right.
That won't hurt, especially when it comes to fundraising. But, we're watching and waiting now with the supporters, right? So this just happened on Sunday, big seismic shift. We're looking at donors, specifically when we look at Nikki Haley, right? Because it seemed like they were really sharing a lane for the longest time, splitting a lot of supporters, donors. Now that's changed. So Meg, what are you looking at when it comes to where that money is going to go? We're looking at Wall Street. We have these reports with Nikki Haley meeting with J.P. Morgan Chase's Jamie Dimon. She's talking to mega donor Ken Griffin, who's leaning toward her. Just read that Spencer Zwick, who was on Romney's campaign in 2012, big fundraiser for him, is also supporting her now. So kind of coming back to her versus, this was kind of like the big story for Scott going into this race. A lot of people left her for him. Now it's coming back full circle. So what are we watching when it comes to donors and supporters for Haley and DeSantis?
Ideologically, there are a lot of similarities between Tim Scott and Nikki Haley. Sure, it's convenient and kind of a cute soundbite that they are both South Carolinians, but they do have a lot of agreement on issues. And so if you're a donor and you're looking kind of where your money's going to be parked in terms of candidates, she might be your next best bet if Tim Scott had been your guy. But, we're seeing also some other donor moves of people looking toward Ron DeSantis and thinking, well, he might have more momentum, or he might be occupying a bigger of the non-Trump lane within the GOP primary. So, maybe he has a better chance. I mean, it's always hard to know. But, if you had been thinking about Mike Pence, if you had been thinking about Tim Scott, and you're kind of looking around, there are a lot of differences with Nikki Haley, but there are a lot of similarities. And so some donors might be thinking, well, she has momentum. She does have a lot of upward mobility in terms of where her campaign has gone through these last couple of debates. She's had some good moments and has been able to capitalize on that in terms of really, getting a appearance of support. We'll see how it actually translates. But this would be the time for her campaign to try to get a hold of some money to build out more infrastructure. We've heard that there still isn't a lot of infrastructure in these early states. She's spending a lot of time there. But what does the ground game look like? That's a tired phrase, but it actually is starting to matter now that we are very, very close to Iowa.
And it seems like you could probably start taking over some of these operations too, like whatever Tim Scott's operation was like in Iowa, and you can also pick up some Pence folks. I mean, this is when the field starts shifting a good bit, especially when we're like some 60 days away from Iowa. I mean, that's right around the corner.
It is happening.
Yeah, and then you look at also, I saw Trump's own pollster was saying that he expects a lot of folks that were supporting Scott to go to Haley, kind of what you were talking about there too, Meg. So it's going to come down to money and really just kind of a bare knuckle brawl, I would say, between Haley and DeSantis at this point, as they're fighting for a very distant second. We need to remind people.
Absolutely. Former President Trump is still very dominant in a lot of these early state matchups and the polling figures that we see. I mean, that is across the board true. And so wherever either of the other two, where Haley and DeSantis end up, it is a distant second to him at this point. That's in large part due to just kind of a maintenance of popularity, and also just the former president kind of seeming like he was running even when he wasn't. He's always just kind of like kept reminding people, remember what I did for you? You didn't really love me maybe to begin with, but you grew to love me, and I'm still saying the same stuff.
So you think they're really, we also know that she's introducing herself more and more. She's putting up $10 million in advertising on these airwaves. We've seen those other candidates do that before. Now she's really kind of capitalizing on this momentum, which we keep hearing a lot about, especially when it comes to polling. We saw the Winthrop poll come out this week where she's still maintaining second place, well ahead of DeSantis, but still very far behind Trump. So it's going to be interesting, I guess, Meg, what are you watching with 2 minutes left here over the next couple months, weeks, when it comes to this field where we can see things going?
I think that we're going to need to see like visible excitement. You know, you and I have both been out on the road. We've been in Iowa in these early places, early caucus places and voting places. And it's not all about crowd size. That is not like, I'm not saying that at all. But I think you can.
Don't tell people on Twitter about that, man.
But seriously, like, that's so true. But when you look at these events, you know, kind of like feeling the energetic vibe, it's hard to put into words, but you can feel it.
Yeah.
And I think that as we go into those places, even here in South Carolina, which obviously is the first in the South GOP primary state, we're going to need to kind of feel that vibe to see, like, are any of these people who potentially had been supporting Donald Trump maybe changing their minds? Some of them, the answer is no. I don't know what the percentage would be, but a lot of those people are baked in, and that's where they are. But for the people who might possibly be willing to change, they are going to need to feel excitement for whichever that other candidate is who would be getting their support. And that's what we're going to have to be able to see, especially in the early states where these candidates are going to be hitting the ground hard between now and Iowa.
Especially that, and then also the December 6th debate, and then
Absolutely.
not making any missteps too. We've already seen a couple of those happen already. And
You got to make sure to land your zingers and to get your attacks in, but also not to mess up. And that's a very delicate balance. I'm glad it's not me up there on the debate stage.
Yeah.
But yes, absolutely, that's on their minds too.
A lot to watch, and we'll be there. We'll be on the campaign trail with AP
Certainly.
National Politics reporter Meg Kinnard. Thank you so much.
Thank you.
Joining me now to discuss the economy is Laura Ullrich. She's a regional economist with the Federal Reserve Bank of Richmond. Laura, welcome back.
Thanks so much for having me back.
So, Laura, let's just start off with a really nice, big, broad question. And how is the economy doing right now from your perspective?
Yeah, you know, Gavin, this has been such a unique time now. I feel like I've been saying that for 3 years, but the fun, overall, the economy is doing well. I mean, we continue to get kind of month after month of positive news on the employment front. The retail sales report that came out a few weeks ago was more positive than people expected. So overall, the economy is strong. However, clearly, we still do have inflation well above the 2% average target set by the Fed. And so even though the interest rates weren't increased this past most recent FOMC meeting, Chair Powell certainly, put a statement out saying that they were a little concerned that additional action by the Fed might be needed to get inflation back to 2%. So mixed signals for sure, but overall the economy is holding up well.
Yeah, when we look at unemployment in South Carolina, like you're mentioning, we're at a record low at 2.9% in September. Labor force participation rates at 57%. Hourly earnings are up to $30.07 an hour. So these are usually really great things to see. Does that work with how the economy is going right now when it comes to inflation also being a problem?
Yes, so great question. When I saw the most recent jobs report, it was more positive than expected, way more positive than economists were expecting. My first thought was, wow, from an employment perspective, that's really great, right? And my second thought was, goodness, that makes getting inflation down even harder, right? So inflation really can be caused by increases in demand or decreases in supply. And on the demand side, the more money people have in their pockets, obviously, the more they demand goods and services. And so as you see those wages going up, as we see more people becoming employed, demand for goods and services climbs, which is kind of the opposite of what that we need for inflation to come down. We don't, though, necessarily we don't need to see job losses overall, right? I mean, it is possible for us to have this idea of a soft landing that everybody's heard about, but certainly the very strong job growth kind of works against what the Fed's trying to do with inflation.
And Laura, you mentioned that soft landing where you're trying to get back down to 2% without crashing the economy. Are we feeling pretty optimistic about that? I mean, we've been talking about different things for the past 3 years. Everyone's always been calling for the recession, then it doesn't happen. Now we see these incredible economic numbers too. So are we still looking for some sort of recession or a pullback, or how do you see it the next couple months?
So I will say that if you looked at all the economic forecasts that were out there for 2023, many of them were calling for a recession this year or early into next year. But over time, most of those models have taken out the probability of a recession. Like that's not what they're saying now. So I think the recession fears certainly continue to abound, but are lessened compared to what they were this time last year because growth has just beaten expectations. I mean, those forecasts were basically expecting flat growth in 2023, and we've seen growth that's been pretty strong for the U.S. this year. All that being said, though, if inflation continues to come down, it might not happen at a very fast pace, but if it continues to come down slowly, we could have this idea of a soft landing, right? But if inflation is more stubborn and doesn't come down back to where the Fed wants it to be, needs it to be, then additional Fed policy might have to take place, and then I think the probability of a recession could go up. But right now, I feel it's certainly possible for us to have a soft landing.
Mm-hmm. Though if you listen to what opinion polls are saying and what Americans are feeling about the economy, you would think we're in a recession right now, right? They say everything's on the wrong track. It's always interesting to see this. You look at the fundamentals are so strong. We're talking about GDP growth. You're talking about the retail sales, unemployment, and these higher wages. So what do you say? What do you tell people when you see this disconnect between fundamentals and then what folks are feeling and seeing?
It's so interesting. This is a typical pattern. We also see this with companies. We help run the CFO survey, which is a national survey of CFOs across the country, along with Duke University and the Atlanta Fed. And in the CFO survey, if you ask CFOs about the overall economy, they're relatively negative about it. But if you ask CFOs about their own companies, they're positive. But that gap between how people and consumers, we see the same thing. If we ask them, how is the economy overall? Those views right now are on the negative side. And if you look at the consumer confidence index and some of those measures, they're at pretty low points right now, things that are almost comparable to kind of the Great Recession. But then if you ask people about their own households, they're more positive. So those patterns are known, and it's kind of always that way. But right now, that gap between how people feel about the broader economy and then their own company or their own checkbook is wider than it typically is. And so you can feel this, right, in kind of the tone of conversation about the economy and things like that with people, whether it's at work or on TV or friends. But you can also see that people are feeling pretty confident about their own finances or their company finances because they're spending money, right? That's why we're seeing retail sales climb. That's why we're seeing, spending in travel and tourism remain as strong as it has been. So the disconnect is there, but I really think it's how people feel about their own company or their own wallet that really drives consumption.
Mm-hmm. Yeah, one of those fun little phenomena that economists get to play around with. And maybe part of that has to do with mortgages and interest rates, Laura. We're seeing that the Fed did hold the interest rates at steady at 5.5% around there to combat inflation. What were some of the big takeaways from the meeting this month with the FOMC that you heard from Chair Powell, from other folks, and maybe what you're hearing from businesses in the Carolinas about some of the challenges that they're facing?
So for businesses, the range of impacts they're experiencing from the interest rates increasing is just depends on how interest rate sensitive they are, right? So if you talk to companies that are in interest rate sensitive markets like banks or commercial real estate, this is really a challenging time for them. There's other companies, though, that are still experiencing very high demand because consumption demand has remained so high. So we hear a range of opinions there. But I think overall the tone from the FOMC when I read the statement and have listened to some of the sound bites from interviews from this week is that, this month they decided that it was time to hold and kind of pause, just, continue that pause, but that they're not confident at this point that it's done. And if you look at the summary projections that the FOMC members put out, you can see that overall, they're kind of expecting maybe one more increase even by the end of the year. So it'll be interesting to see what happens in the next few months, but still a lot of uncertainty out there on the exact path of a return to 2% inflation.
Yeah, and that could be a matter of whether you say the interest rates tick up more or if they're held steady for longer. That's just going to be something that you watch for the next coming months. But while they are staying steady, we are seeing mortgage rates where maybe a lot of folks are really feeling that pinch. North of 8% right now for a 30-year fix. And that's probably a hard pill for people to swallow when we had rates as low as 2.5%, as a result of the pandemic. So do you think it's maybe a matter of people trying to mesh expectations with reality? I mean, you look at the historic average for a mortgage rate, it's like around 7.5%. So we were maybe spoiled at 2.5, 3%. Now we're at 8. We just kind of have to live with reality a little bit.
Yeah, I've mentioned this when I'm out and about presenting right now. When I bought my first house, it was in 2001, and I had an 8.2, or 2002, I had an 8.25% mortgage, and my parents thought that was amazing because when they bought their first house, they had a 14.5% interest rate, right? But what has happened since then is no one under the age of 40 years old has ever seen this in practice, right? Interest rates have been very low for very long. I mean, how long were we saying we have historic low mortgage rates? We were saying that for, I mean, really a decade. So there are a lot of people who are locked into these very low mortgage rates. And so for many of us that have those low rates, unless we have to move right now, we're probably not going to choose to jump up to an 8% rate, right? And so you'll see some stagnation there from existing home sales. And then for people who are just entering the market, these higher rates mean they might have to buy smaller homes than they were expecting, right? Or maybe not as bright and shiny as they were expecting to buy. And so I absolutely think there's adjustment phase there for people to take what they, to match their expectations with what's actually going to happen.
And then, Laura, when we look at global geopolitics too, and conflicts going on around the world, and how that might affect, the economic recovery abroad, we've had such a strong recovery. Not every country has had such a beneficial economy. But then you look at, the war in Ukraine, now with this Israel and Hamas situation going on. How do you see that playing out? How that might affect the United States? Do you see any risk for us, or any benefit, unfortunately, as morbid as that might sound?
Yeah, I think geopolitical risk is one of the largest risks to the economy and us having a downturn. A lot of this has to do with the risk levels have to do with how much we import or export to different places. And with Israel and Palestine, I mean, there's not as much direct risk in that we don't import a lot from those countries. But if that geopolitical conflict were to break out into a broader region in the Middle East, we could see really significant impacts. And especially, I mean, in the 1970s, some of the inflation and economic pullback we saw then was due to issues in the Middle East and oil embargoes and things like that. So certainly something we need to pay really close attention to. And we're not isolated from the rest of the world. We consume products from the rest of the world. They consume our products. And so it certainly can have serious economic impacts.
And that's going to be something we have to, like you said, keep an eye on. But you'll be watching,
Yes.
I guess, what the price of a barrel of oil and similar indicators.
Yes, absolutely. And I think, part of this is about the geography of where it is and how it spreads. If it stays isolated, those impacts might be more isolated. But if it were to spread outside of that, I mean, I think there's certainly concern that this could become a broader Middle Eastern conflict. And we do have a lot of import-export relationships with that part of the world. I mean, we've seen that with Ukraine too. When that broke out, there were certain things like wheat, for example, that price went up, and other products like nitrogen-based fertilizers, where a huge percentage of those are made in that part of the world. And so some people might not have noticed impacts at all, but if you're a farmer in the state of South Carolina, you saw impacts on the fertilizer prices that you were paying all of a sudden too, right? So a lot of it depends on the industry that you're in, and like I said, what those consumption patterns are around the world.
Laura, with just a couple of minutes left, I want to ask you, we've seen some things that would have been shocks to our economy too. We saw like strikes, the writers' strike, the auto workers' strikes. Those have all been resolved for the most part. And we're still very strong. So I'm wondering, what are you watching going forward? What is on your radar when it comes to indicators to watch here at home when it comes to just how healthy the economy is going forward?
Yeah, absolutely. So consumption is really what has been keeping the economy so strong. Consumption makes up about 70% of GDP, and real consumption, so consumption holding inflation flat, has remained extraordinarily resilient given the inflation that we've had. That's the number one thing I'm watching, because if that starts to slip, then you're going to see companies producing less, which means they need less employees, more layoffs, those sorts of things. But I do think we're in a unique labor situation now where, because of the demographic shift that we're experiencing and the baby boomers retiring at a faster pace at this point, employees, the labor supply is lessened. And so employees have more power than they did a few years ago. And you're seeing that in some of these strikes. And some of the disagreements between unions and companies. And so I don't expect those to go away anytime soon, because this demographic challenge is just going to continue to get worse over the next few years.
Yeah, and we'll be watching consumption for the fourth quarter, especially with the holidays coming up. So that's always a big one to watch. So thanks, Laura. Thanks for catching up with us. That's Laura Ullrich. She's a regional economist at the Federal Reserve Bank of Richmond. Thanks.
Thanks so much for having me.
To stay up to date with the latest news throughout the week, check out the South Carolina Lead. It's a podcast that I host on Tuesdays and Saturdays that you can find on southcarolinapublicradio.org or wherever you find podcasts. For South Carolina ETV, I'm Gavin Jackson. Be well, South Carolina.